Hello, my name is Karen Mariner. I'm a licensed health insurance agent in the state of California. I specialize in helping individuals and families find affordable, high quality health insurance. I also work with Medicare beneficiaries to set them up with prescription drug plans and supplements and Medicare Advantage plans. So, um, thank you so much for tuning in. I'm going to talk for the next couple of minutes about sort of how to start your life with health insurance for a young adult. Um, I work with a lot of kids who are just coming off their parents' plan when they're 26, or they're making enough money to warrant their own tax return, and they don't have coverage through their work. So you'll see some of the considerations that I discuss with them and some of the decisions they have to make along the way. Young adults and health insurance. So there are a couple of different types of young adults. The first type are earners. Earners are making enough money to file their own tax return, which is the threshold this year is $10,300. Sometimes these earners are making over $16,000 and sometimes they're earning less. And these earners are not being offered employer benefits. Wherever they're making their money, those employers are not offering employee benefits. I also work with students. Students are still generally considered a dependent on their parents' tax return and generally not earning enough taxable income to file their own return. And then there are the new grads. New grads may or may not be considered a dependent on their parents' tax return. Talk to your tax advisor for those specifics. Many times they are, but sometimes they're not. And oftentimes they're not earning enough taxable income to file their own tax return right out of the gate, especially if they're not in a job where they're being offered health insurance. So why do they lose insurance? In general, kids that are turning 26 and the employer plan is no longer going to cover them. That's super typical. They're not a dependent anymore on their parents' return because they're making more than $10,300 a year in taxable earnings. Or they're no longer a dependent on their return due to their age. Maybe they're an older student or they went back to school or, for some reason they're not allowed to be considered a dependent. And what are their what are their coverage options? Well, the first one is sticking with the parents group plan and going on COBRA as a continuation of the group benefits. Another option is medi-cal, our California version of Medicaid insurance for low-income people. They might be able to get subsidized coverage through Covered California or another Obamacare exchange. Or their parents might opt to just buy them full price coverage directly with the health plan, depending on if that's affordable or not. There is a very close relationship between income, taxable income, and insurance. So let me just talk a little bit about that. The three avenues to pick up insurance in the individual market are either going with medi-cal, getting insurance through the Covered California marketplace, and that is, if you have a certain income, we're going to talk about that, or just going directly to the health plan and buying insurance, and that is called off exchange. So off of the Covered California marketplace or exchange. For a single person earning less than $16,000, and these numbers are round, that single individual either has access to medi-cal, and that's just going right through Covered California or your state exchange. If your state has expanded Medicaid, these rules apply. If they haven't, then it's a whole different ballgame. There's an asset test. There's a lot more complexity, but and much harder to qualify. But here in California, we have expanded Medicaid. It's called Medi-cal, and this is a very good option for many young people who are coming off of a group plan or are students. In the $16,000 to $25,000 range, The young adult would be offered cost sharing assistance, that is help with their deductibles, co-pays, co-insurance levels, and premium assistance, meaning help paying the premium to the carrier. If you don't understand what I'm talking about, cost sharing and premium assistance, please watch my subsidies video on my YouTube channel or on my website. Over $25,000, the young adult will be offered premium assistance. That is just money, tax credits in advance to pay their premium. Sometimes, if the young adult is making $48,000 a year or 47 or 46, they actually aren't going to be qualifying for a subsidy because they make plenty of money to pay for their relatively low premium. And then anything over 48,000, there's absolutely no reason to go through Covered California, and then we just go directly to the health plan for a retail plan. So medi-cal, you might decide as a parent that you don't want your kid on medi-cal, and so you just go directly and buy them a plan and don't try to get any financial assistance from the government. If you need to find me on the internet, you can go to my YouTube channel. That's where you found this video, or maybe you were on my website. You can go to my Yelp page and get to my website, write a review, read other people's reviews, and you can also find me on Facebook at calhealthagent.com. Try to make it easy, YouTube, Yelp, Facebook, or you can just go to my website, calhealthagent.com. Thanks very much for your attention and for watching this video. Take care.